Good morning and welcome back to Almus Market Mornings. It's been another interesting start to the week with gold back near its 3-month highs as the Treasury's attempts to bring down the borrowing costs. It raised fresh questions around the dollar as we discussed last week itself. But Bessent's Treasury twist did give the yields a quick push lower, but that move did not last for very long. And now at the same time, the focus is now shifting to Japan, where the yen is once again under pressure and the market is pricing in a higher chance of a BOJ hike in September. And we'll hear from Treasury Secretary Bessent again tonight with his press conference at 11:30 p.m. IST. And the big question is whether he talks about the Iran sanctions or gives us another hint on what the Treasury plans to do to keep those long-term deals under control. Good morning, Jayaram sir. What do you think the markets will be watching most closely today from Bessent's conference tonight?
Good morning, Ishan. So market is looking to hear two voices this week. The first up, of course, what you mentioned, Scott Bessent press conference, which is scheduled at 11:30 p.m. India time today. So the main subject is expected to be the U.S. sanctions campaign against Iran. Details of the new Iran sanctions, by far the most important. He said, Bessent having said that the toughest sanctions in history. So there will be target against Iranian oil and financial entities. US will also attack Iran's oil export revenues and financial channels, and the countries doing businesses with Iran, particularly China. So the objective is to achieve extreme isolation of Iran, economic isolation. So while the press conference is mainly about Iran, Besant might face questions about the US Treasury market, particularly in view of the announcement last week. So I think one can be prepared to hear something about that, but definitely the focus is on Iran. Now, the other voice that we are looking to hear is Kevin Warsh's speech at Jackson Hole Symposium, which starts on the 27th, that is the Thursday this week. Now, all these moves that we have had since the announcement by Treasury has actually been very choppy. And, while the initial moves have stopped out the longs and, the market has actually got now into a shorting mode on the US treasuries. And actually, the market is quite confused than confident that their bag of tricks by the treasury is really a remedy for the problem that they are having rather than a band-aid for the mounting debt problem. So the traders are still concerned about the inflation, some viewing the Fed as behind the curve, and also on the inflation fight. So none of this actually has given any sort of confidence. If anything, they have opened a floodgate. Once the government or the authorities recognize that there is a problem, and the market will sense blood and they start playing on the vulnerability. So the US has a huge debt hangover. There is a higher interest rate that I have to pay, and as both of them rise, there can be a major blow up. The Fed can delay it by repurchasing their own debt, but they can make it worse later because the printing of money is again going to increase the inflation. So we have a whole lot of possibilities, and most of them are challenging for the markets. So that's what the market is focusing. So we, the Fed and or rather the Treasury is paying a huge amount of interest on their debt, almost 2 trillion, almost 1.2 trillion. And then, of course, there will be another 2 trillion because of higher budget deficit. They need to refinance about 9 trillion worth of debt also this year. So all this, is making for a huge turbulence in the market. What markets had uh, taken on Friday was, so stocks did close somewhat positive on Friday, but that was just a short covering ahead, of Besant's speech as well as Kevin Warsh going ahead. But overall for the week, it was lower, and the bond yields, as you said, had come off a bit and then bounced back. Focus is also on Japanese yields, which are touching new all-time highs as well. So bond market remains our focus. And of course, the dollar also fell to a 3-month low against the euro on Friday as concerns mounted about Treasury's plan to buy back long-dated government bonds. More buybacks can be on the way. While they may not call it as a QE, it is a QE, and it is going to be printing of money, which will weaken the dollar much more. On the war front, there is some report saying that Iran and Oman are discussing conditions for resuming negotiations that support resumption of navigation. But of course, this will depend on what Scott Bessent says today, as Iran has said that if there is a fresh sanction, they will, defend it with a much more, attacks as well. And they will ensure that none of the ships pass through the Strait of Hormuz. I think we are in a very difficult situation, and we have already touched upon the fact that the strategic petroleum reserves have been down to very low levels, and further attacks and further stoppage of shipping from the Hormuz Strait would be actually paving the way for Brent oil. Now, Brent oil has touched a 4-week high of 94.30, and further rise through 97. I think it's going to be a big technical rally that we can see. So the markets have seen huge diversification back into the precious metals. Gold has gained about 17% from the low of 3942 that was seen not long ago. And silver, obviously, being the more volatile on both sides, has gained much more than gold. And in another sign of big diversification, the Bitcoin has gained more than 37% from the low seen towards the end of June. So these trends are set to continue. Dollar is likely to weaken. Any pullback will be seen by the market to sell more dollars. And so that's the situation we are in. As far as India is concerned, good part is we have had almost 73 billion of inflows due to the various schemes announced by RBI, FCNRB accounting for 65 billion. We know that the scheme will end in less than a week from now, and maybe we are going to touch that 80 magic mark, which was initially mentioned as a possibility, and now it looks a very good possibility. Now, the point is that none of this has helped the rupee to sustain the gains that initially it made. So we are trading well above 95.50 resistance and pushing towards 96 as well. And in fact, the dollar's overall weakness after the announcement by US Treasury about bond buying program, increasing the bond buying, is not helpful for the rupee so far. In fact, some of the peers like Indonesian rupiah also gained, but the rupee has failed to follow the trend. Importers are still very active, and interestingly, even the PSU banks have been seen buying on dips. So I think there is a good case for 96 to be retested. All that we can say is that RBI is now flush with the dollar liquidity, and any attempts by the market to weaken the rupee beyond 96 will be met with strong intervention. They are not going to allow rupee also to appreciate in a big way, but at the same time, beyond 96, they will be there to defend the rupee. So I think Indian authorities will be very happy to have the currency stabilized between 95 and 96. And now that they have gained time with a good amount of reserves accumulation on the headline reserves, I think markets also will be hesitant to take on the RBI. And therefore, I expect this 95-96 range to continue. Only possibility when the rupee can. In fact, I can talk of two possibilities. One is if there is a further printing of money by the US to address the yields to be brought down, then more money can flow into India if the yields start falling. That's one way. The other one is if bond yields keep rising globally, then can actually lead to a global market sell-off, and that can also lead to Indian markets falling and fresh outflows from FIs. These are the possibilities that the rupee is facing, but as of now, 95, 96 is going to hold. Thank you.
Thank you, Jayaram. So, and just to summarize, we are set to hear two voices this week. One, as I mentioned, is Scott Bessent and the new Iran sanctions, which he will talk about, said to be the toughest sanctions in history, and but questions still may be posed regarding the long-term yields. The second is Kevin Warsh on Thursday in the Jackson Hole conference, and the U.S. Treasuries still continue to pay huge interest on the debt, almost $1.2 trillion, and a lot of the debt is still to be paid back this year, almost 9 trillion, and the yields being in action, a lot of this is still being troublesome for the markets. And the dollar fell to the 3 month low against the euro, and gold almost at its 3 month high this morning, as the dollar is set to be weaker from here. And domestically, the RBI scheme of the FCINR flows, which is ending on the 31st of August, and I think we have a good possibility of the flows touching to almost $80 billion. But this is not in turn help the rupee as much, as we continue to stay higher as the importers are active, and also the RBI is the one buying on dips. But as the RBI is now flush on dollars, we can see them standing strong at 96 if we see an attempt to break. But they won't also let it appreciate as much, as they could be the ones buying on the dips. So a ranged market is what we're expecting to continue between 95 and 96. Thank you all so much for listening, and we'll catch up tomorrow with a fresh under updates. Thank you.